Hello, everyone, and welcome back to English Podcast. And thank you for joining us today.
My name is David, and it's great to be here with you all again.
My name is Emily, and today we have an upper intermediate English lesson for you.
Today's lesson is all about money, which is an important topic for everyone.
More specifically, we are going to talk about the stock market.
The stock market is a very interesting topic, and it is also very current right now.
Around the world, stock markets are not doing very well, and this is in the news every day.
You may have seen a lot of information about this on television and online news.
So today, we want to explain the words, phrases, and expressions that you have been hearing.
But first, we need to look at a few important indicators.
These indicators are actually acronyms, and they are very common in stock market reports.
Let's start with today's vocabulary preview.
The first word in our vocabulary preview is NASDAQ.
NASDAQ is spelled N-A-S-D-A-Q, and it is a major American stock market.
NASDAQ is an acronym, and the full name is very long, so people usually just say NASDAQ.
Many publicly traded companies buy and sell their stocks through NASDAQ.
A publicly traded company allows people to buy and sell shares in the company.
When NASDAQ goes up or down, it shows how these companies are performing.
Now, let's look at another important indicator, the Dow Jones indicator.
The Dow Jones indicator tells us how large and important companies are doing.
If the Dow Jones is very low, we usually think the market is not doing well.
When the Dow Jones goes up, it often means the economy is improving.
All right, Emily, we're back. That was a lot of interesting vocabulary in our last section.
Yes, Davit, and I think some of those words were very specific to the stock market, so they might have seemed a little tricky for some listeners.
Exactly, Emily. So why don't we take a closer look at a few of those words and focus on our language takeaway today?
Great idea, Davit. Let's start with the word portfolio, which is a very important term in banking and finance.
Right, Emily. So basically, a portfolio is the variety of things that you own. For example, in the stock market, your portfolio could include stocks, bonds, mutual funds, and more.
That's correct, Davit. And if you're a company, your product portfolio could be all the products that your company owns and sells.
Exactly, Emily. And in our dialogue earlier, we said our portfolio is worth half of what it was a week ago. That means they lost half of the money they invested, right, Emily?
Yes, Davit. All of our investments are part of a portfolio. And when we lose money, we can say that our portfolio is worth less now than it was before.
Perfect, Emily. Now let's move on to the terms bull market and bear market, which are very common in financial conversations.
Right, Davit. First, let's think about the words literally. A bull is an animal with horns, and a bear is another kind of animal. But, Davit, we're not actually talking about animals here.
Exactly, Emily. In finance, these are special phrases. A bull market is a market that is growing very strongly and rapidly. People often use this term when the market or economy is doing really well.
Right, Davit. For example, people sometimes talk about China's bull market because it has been growing consistently for many years.
And on the other hand, a bear market is a market that is slow, weak, or declining. You can think of a bear as sleeping or hibernating, so the market is kind of resting or moving slowly, Emily.
Exactly, Davit. So when the United States' market slowed down last year, people said it was a bear market.
Very good, Emily. Now let's go back to our portfolio example. Besides stocks, the two people in our dialogue were also talking about bonds.
Right, Davit. Specifically, they mentioned high-yield trash bonds and government bonds. So what exactly is a high-yield bond and what is a trash bond?
Good question, Emily. First, let's talk about yield. Yield is basically how much something gives you, like the return you get. For example, an orange tree can yield 300 oranges per year. That means it gives you 300 oranges.
Ah, I see, Davit. So if a bond is high yield, it means it gives you a large return or profit.
That's right, Emily. Now, a bond itself is a promise. It means the seller promises to pay back the money you invest along with interest.
And a trash bond, David, is a very risky bond. The seller might not be able to pay you back, so there is a chance you could lose your money.
Exactly, Emily. So a high-yield trash bond is interesting because you could make a lot of money from it, but at the same time, it is not very dependable or
David.
safe.
It's a bond that could give you high returns, but also comes with a high level of risk. That's why investors have to be careful when buying these.
Perfect explanation, Emily. And this is exactly the kind of financial language that is used every day in the stock market. Understanding these terms helps you follow news about investments, markets, and portfolios much better.
Exactly, David. So these high-yield trash bonds are definitely risky.
Yes, Emily. And of course, because they are riskier, they tend to offer more yield. That's why they are called high-yield bonds.
Right, David. So we can say high-yield trash bond is a bond that could give a lot of money, but it's not very dependable.
Now, Emily, the next term in our dialogue is liquidity. They said they will give us liquidity to cut our losses. But what exactly does that mean?
Well, David, maybe in your company, the accountant talks about liquidity a lot. Basically, it's just having money available in cash, so you can pay for things or buy things right away, not with credit.
Ah, I see, Emily. So liquidity really just means that money is available, ready to use, not tied up in investments or loans.
Exactly, David. Liquidity is an important concept in finance because it tells you how flexible your money is.
Great! Now, Emily, let's move on to the next idea in the dialogue. Let's think outside the box and reinvest in emerging markets.
Yes, David. So first, let's talk about emerging markets. To emerge means to come up or rise, right?
That's right. Emily, so an emerging market is a market that is new, growing, and not yet fully established. It could be exciting and have a lot of potential.
Exactly. For example, Southeast Asia or parts of West Africa could be considered emerging markets because their economies are growing quickly, but they're not as stable or developed as markets in Europe or the United States.
Very good, Emily. So when they talk about reinvesting in emerging markets, they're looking at places that are new and rising with opportunities that could be very profitable.
Right, David. Now, let's focus on some key phrases from this dialogue that are really useful for fluency. The first one is to cut our losses.
Exactly, Emily. This is a phrase we've heard a lot in finance over the past year or two, especially when things aren't going well.
So, David, when we say cut our losses, it means to try and stop losing money. Maybe you sell an investment early or stop a project before it costs you more.
That's right, Emily. In our dialogue, they said, let's cut our losses, meaning they want to stop everything that is losing money and move on.
Exactly. You can even use it in business, David. For example, my business is failing. I'm going to cut my losses, sell it, and start again.
Perfect example, Emily. So to cut your losses is basically accepting that something isn't working, stopping it, and moving forward.
Right, David. It's a bond that could give you high returns, but also comes with a high level of risk. That's why investors have to be careful when buying these.
Perfect explanation, Emily. And this is exactly the kind of financial language that is used every day in the stock market. Understanding these terms helps you follow news about investments, markets, and portfolios much better.
Exactly, David. So these high-yield trash bonds are definitely risky.
Yes, Emily. And of course, because they are riskier, they tend to offer more yield. That's why they are called high-yield bonds.
Right, David. So we can say high-yield trash bond is a bond that could give a lot of money, but it's not very dependable.
Now, Emily, the next term in our dialogue is liquidity. They said they will give us liquidity to cut our losses. But what exactly does that mean?
Well, David, maybe in your company, the accountant talks about liquidity a lot. Basically, it's just having money available in cash, so you can pay for things or buy things right away, not with credit.
Ah, I see, Emily. So liquidity really just means that money is available, ready to use, not tied up in investments or loans.
Exactly, David. Liquidity is an important concept in finance because it tells you how flexible your money is.
Great! Now, Emily, let's move on to the next idea in the dialogue. Let's think outside the box and reinvest in emerging markets.
Yes, David. So first, let's talk about emerging markets. To emerge means to come up or rise, right?
That's right. Emily, so an emerging market is a market that is new, growing, and not yet fully established. It could be exciting and have a lot of potential.
Exactly. For example, Southeast Asia or parts of West Africa could be considered emerging markets because their economies are growing quickly, but they're not as stable or developed as markets in Europe or the United States.
Very good, Emily. So when they talk about reinvesting in emerging markets, they're looking at places that are new and rising with opportunities that could be very profitable.
Right, David. Now, let's focus on some key phrases from this dialogue that are really useful for fluency. The first one is to cut our losses.
Exactly, Emily. This is a phrase we've heard a lot in finance over the past year or two, especially when things aren't going well.
So, David, when we say cut our losses, it means to try and stop losing money. Maybe you sell an investment early or stop a project before it costs you more.
That's right, Emily. In our dialogue, they said, let's cut our losses, meaning they want to stop everything that is losing money and move on.
Exactly. You can even use it in business, David. For example, my business is failing. I'm going to cut my losses, sell it, and start again.
Perfect example, Emily. So to cut your losses is basically accepting that something isn't working, stopping it,
The
and moving
second
forward.
phrase, David, is think outside the box. This is very common in meetings or when managers are asking for new ideas.
Yes, Emily. When they said, we could do this, and that would force us to think outside the box, it meant they wanted to be creative and try new ways of solving a problem.
Exactly, David. It's about breaking away from traditional thinking and finding innovative solutions that could produce positive results.
And this phrase is widely used in business, Emily, in discussions about ideas, strategies, and problem solving. People are often encouraged to think outside the box to discover new opportunities.
Right, David. So both phrases, cut our losses and think outside the box, are very useful not just in finance, but in everyday business and problem-solving situations as well. Right, David. So when we say think outside the box, it really means don't just do things the way you always do.
Exactly, Emily. Don't repeat the same actions over and over. Try something new. Be creative and come up with a great solution. That's what thinking outside the box is all about.
Yes, David. And there are so many other useful phrases in this lesson. I think we've learned quite a bit about the stock market today.
Definitely, Emily. So now let's listen to the dialogue one more time and see all these words and phrases in context.
Sorry to bother you, sir, but I have some bad news.
What is it, Emily?
Well, the stock market just took a huge plunge, and we've lost a lot of money.
What do you mean, Emily? What happened?
There are many factors, David, but the NASDAQ is down 200 points, and the Dow Jones indicator also suffered. Our portfolio is worth half of what it was 1 week ago.
How is this possible, Emily? You were supposed to talk to our stockbrokers and make sure our investments are safe and profitable.
I know, David. We didn't expect a bull market to suddenly become a bear market. On the other hand, you still have some high-yield trash bonds and government bonds, which will give us enough liquidity to cut our losses and reinvest in emerging markets.
That's smart, Emily. So we could potentially turn this tragedy into an opportunity and make ourselves think outside the box.
Exactly, David. And one other thing, don't tell the rest of the stockholders about this. If they find out, it could be the end of this company.
You know, Emily, I remember being a little kid, sitting in front of the TV with my parents. On the news, there was always a business segment.
Oh yes, David. And you'd always hear things like, the NASDAQ is down 10 points today, or the Dow Jones Industrial is down 10 points, up 2 points yesterday, and so on.
Exactly, Emily. It can be very complicated, especially when you look at newspapers with all the numbers for different publicly traded companies. It almost feels like a science.
Definitely, David. Some people have actually made a lot of money playing the stock market by buying stocks when they're low, waiting until they rise, and then selling them for a profit.
For example, their business is very profitable. Or, I think we can be profitable if we reduce our operational costs. And one more example, real estate is one of the most profitable businesses in the world. Now, let's talk about yield. Yield is the amount of something that is produced. In finance, it usually refers to how much return an investment gives you. For example, the stock you currently own yields about 10% per year. Or, I am very unhappy with the yield of these securities. And, the yield on your securities could be greatly affected by inflation. Finally, Emily, let's look at think outside the box. Yes, David, this phrase means to take another look at something, be creative, and find new solutions. For example, when you have to solve a problem, it's good to think outside the box. Another one, some of the great inventions of our time were created because inventors decided to think outside the box. And thinking outside the box can offer a different and novel perspective on things and life. Now that we've gone through the vocabulary, David, let's put it all together in today's story. That's right, Emily. In today's story, we'll uncover 5 powerful lessons about managing money, lessons you might not learn in school, but that are crucial for financial success. And as we dive into Sam's journey, we'll also see these words in context. This will help us practice English, understand new words, and learn how to use them naturally in sentences. Exactly, Emily. So listen carefully, repeat after us when you can, and try to remember the meaning of each word as it comes up in Sam's story. By the end of today's lesson, you'll feel much more confident using words like plunge, weigh in, profitable, yield, and think outside the box. Perfect, Emily. Let's get started with the story and see how Sam navigates the world of finance. That's right, Emily. Once upon a time, in a bustling little town, there lived a 27-year-old man named Sam. One afternoon, Sam was sitting on the side of the road, lost in thought, feeling frustrated. Despite working hard for 5 years, his life hadn't improved. Sam wondered, Emily, is there a way to escape poverty and achieve real wealth? As he walked past a grand mansion, something compelled him to step past the tall iron gate without permission. Little did he know, this daring act would lead him to a life-changing lesson about money. From afar, Sam saw an elderly man sitting on a garden bench with a cup of coffee. This was Mr. Hayes, the mansion's owner, a wealthy yet humble and generous soul. Sam approached politely and said, "I'm sorry for entering without permission, Mr. Hayes." Mr. Hayes was surprised, but welcomed him kindly. He was curious why Sam had come.
Sam sat down beside Mr. Hayes and began, "Sir, I've worked for 5 years earning a decent wage, yet my life hasn't changed. I don't splurge, but I just can't seem to get ahead. Do you have any advice on how someone like me could become wealthy?"
With a warm smile, Mr. Hayes replied, "Anyone can achieve wealth, Sam, including you. I'll share 5 principles about money that you won't learn in school. Follow these carefully, and I assure you, you'll find yourself on the path to financial success."
Eagerly, Sam listened as Mr. Hayes began.
The first rule, Mr. Hayes said, is to spend less than you earn. This is the foundation. If you don't master this, you can't move on to the other steps. For example, if you make $5,000 a month, set aside at least $2,000. If it's $3,000, save $1,000.
Avoid expenses that exceed your income, he continued, whether loans, credit card debt, or gambling. Even with a 6-figure salary, without this rule, you'll remain in debt.
Sam nodded thoughtfully, absorbing every word. Mr. Hayes took a calm sip of his coffee and continued.
The second rule is to have an emergency fund. Life is unpredictable. Car repairs, a leaky roof, or even layoffs can happen at any time. Without an emergency fund, you're forced to borrow or sell assets at a loss, which restricts your options and adds stress.
Think of it as your safety net, protecting your finances when unexpected events arise, Emily explained. Sam nodded again, clearly appreciating the wisdom in this approach.
Now, the third lesson is about investing, Mr. Hayes said. People like you might feel unsure about investing in a business or stock since you may not have much knowledge, but the best investment you can make right now is in yourself.
Curious, Sam asked, "How, sir?"
Mr. Hayes replied, "Take your skill set, whether carpentry, plumbing, or customer service, and invest your time, energy, and money into mastering it further. Improving your skills is one of the most profitable investments you can make."
Emily, this is also where we can bring in some vocabulary from today's lesson. When we invest in yourself, you're increasing your yield, which means the return on your effort will grow over time.
That's right, Davit. And by thinking outside the box, Sam could find creative ways to grow his income, not just follow the same old routine.
Exactly, Emily. Later in the story, Sam will also learn about emerging markets, liquidity, and cutting losses, all key concepts in finance.
But for now, the lesson is clear. Spend less than you earn, save for emergencies, and invest in yourself. These are the first 3 steps toward financial freedom.
And in our next segment, we'll continue Sam's journey, exploring stocks, bonds, and strategies to make your money work for you.
Yes, David, stay with us, listeners, because Sam's story is full of powerful lessons and practical vocabulary you can use in your own life. That's right, David. So listeners, practice these phrases, understand the concepts, and you'll feel much more confident talking about money and investments in English.
That's right, Emily. After learning to invest in himself, Sam realized the value of improving his skills. Mr. Hayes advised him, use some of your savings to improve your expertise, attend courses, buy tools, or read relevant books.
He also suggested learn where your boss sources materials or explore ways to market your services better. This is about investing in knowledge and tools, which can pay off later.
Realizing the importance of these words, Sam looked at Mr. Hayes with newfound determination, regretting he hadn't learned this sooner.
Mr. Hayes continued with the 4th lesson. He said, now that you're gaining skills, it's time to start earning more. Once you've honed your abilities, maybe you'll start your own business and your income will grow. You're no longer paid per hour, but based on what you produce. The harder you work, the more you earn.
The sky was getting darker, Emily, yet Sam felt no urge to leave. He was eager to learn the final principle.
And here it is, the 5th lesson. Mr. Hayes said, create passive income. When you've applied the first 4 principles, you should have extra money. Now it's time to let your money work for you. You can invest in property, start a rental business, buy a franchise, or research other sources of passive income. Think carefully and choose wisely.
Then he looked at Sam and asked gently, "How about it, Sam? Are you ready to take on these lessons?"
Brimming with excitement, Sam replied, I used to just go to work, save a little, and hope for wealth to come my way. But I now understand that there's a real strategy, and I'm thankful, sir, for the invaluable guidance.
And that, Emily, concludes Sam's story about wealth, smart work, and financial wisdom.
Exactly, David. And as always, we can also learn new English words and sentences through this story.
Yes, Emily. Let's do a quick audio review of some useful vocabulary. Listen to the meaning, then say the word.
The first word is norm. It means something that is usual or expected.
Next, we have currency. That's the money that a country uses.
Then, margin deposit, the sum of money required to reinstate or start a trade.
Split second, taking effect rapidly or very quickly.
And bid, an offer to pay a particular amount of money, usually in trading or auctions.
Lastly, drastically, something happening very quickly or significantly.
Let's try them faster together now.
Margin deposit, norm, split second, bid, drastically, currency.
Perfect. Now, let's hear them in a sentence.
Norm. What's the norm in this company concerning protocol?
This is the norm, so you'd better get used to it.
Currency. The U.S. currency is the dollar.
Margin deposit. You need a margin deposit to start trading in stocks.
Split second. The car stopped in a split second to avoid the accident.
Bid. She placed a bid of $500 for the antique vase.
And finally, drastically. Stock prices fell drastically last week.
That wraps up today's lesson, listeners. We learned about 5 important financial principles through Sam's story and practiced useful vocabulary like norm, currency, margin deposit, bid, split second, and drastically.
Yes, Emily. Remember, learning English can be fun, especially when you combine it with real-life topics like finance, business, and investing.
Keep listening, learning, and growing. And don't forget to like, comment, and share how this story helped you improve your English.
Thank you for joining us today. We'll see you in the next lesson, where we continue learning together. That's right, Emily. Let's start with norm.
Norm means something usual or expected. For example, McDonald's and street vendors are the norm around here.
Exactly, Emily. So whenever you hear norm, think of something that is common or standard.
Next, we have currency. That's the money that a country uses.
For example, Emily, before I went to France, I had to change some of my Canadian currency into euros.
Or, what's the currency in this country?
And one more example. My country's currency is worth next to nothing in USD.
Moving on, let's talk about margin deposit.
A margin deposit is the sum of money you must put down to start trading, usually in stocks or Forex.
For example, he decided to start with a margin deposit of GBP 100.
And another one. I can't believe I can trade with USD 1 million when I've only put in a margin deposit of USD 10,000.
But be careful, David. One has to be careful with trading using a margin deposit because the risk of losing more money than one has is high.
Next is split second. This means a very quick, almost immediate decision or action.
For example, the gang members were closing in on me fast, so I made a split-second decision to run instead of fight.
Another one. My heart pounded as I made a split-second decision and took hold of her hand.
And one more fun example, my split-second decision to try a trick on my bicycle to impress my friends didn't end well. Finally, let's look at bid. In finance, a bid is an offer to pay a particular amount of money, usually in trading or auctions.
For example, the current bid asked for EUR/USD is 1.3998-79.